Most people ask the wrong question about AI. They ask, where is AI going? But I think that's the wrong frame. The better question is, where is money already moving? Because money reveals conviction. Government makes announcements, media makes headlines, but capital commits. And when capital commits at scale, it tells you where power is forming. Today, we're not predicting the AI economy, we're mapping it. My name is Ilya Lamin, and here we explore the AI economy, not through hype, not through fear, but through structure. And today, we're going to follow the money. We're going to map where capital is concentrated, where bottlenecks are forming, where pressure is building, because bottlenecks equal opportunity. Let's begin at the bottom of the stack. Now, every technological revolution starts somewhere physical. In the AI economy, it starts with compute, GPUs, chips, semiconductor supply chain. Why? Because AI models are not magic. They are compute hungry systems. Training them requires enormous processing power. And when demand for compute explodes faster than supply, capital floods in. This is what we saw. Billions poured into chip manufacturers, data center expansion accelerated. Advanced manufacturing became strategic. This was not random enthusiasm, this was infrastructure scarcity. When something becomes scarce at the base layer of a system, capital concentrates there first. But here's something important. Infrastructure waves are powerful, but they don't last forever. Once capacity scales, capital rotates. And that rotation is where the story becomes interesting. Now, something quieter is happening. AI consumes enormous electricity, massive data centers, massive cooling systems, massive energy draw. So, capital begins asking a new question. Can the grid support AI expansion? This is where things become subtle. Energy infrastructure is not flashy, but it is foundational. Its compute is the brain of AI, energy is the bloodstream, so to speak. Without it, nothing runs. So capital is quietly flowing into power generation, grid modernization, nuclear reconsideration, renewable scaling. This is not about climate headlines. This is about capacity. When AI demand rises, energy becomes strategic. This is where second layer of capital concentration, less visible but potentially more durable. And now the stacks move upward. After infrastructure comes the model layer, the foundation models, large scale AI systems trained with massive investment. Why does capital concentrates here? Because owning the model layer gives leverage. If you control the intelligence layer, you influence the application layer. But this layer is brutal. High burn rates, massive compute costs, extreme competition. Only a few players survive. This is capital concentration in its most aggressive form. But here's the tension. This layer absorbs enormous funding, and when absorptions peak, capital looks for yield elsewhere, which means it moves closer to revenue. Now, this is where the story becomes real. Companies want AI, but integrating AI is hard. Legacy systems, human resistance, security concerns, workflow redesign. The problem is not model availability, the problem is implementation. This creates a bottleneck, and where there's friction, there's capital opportunity. Money begins flowing into AI integration tools, workflow automation platforms, enterprise copilots, vertical SaaS with embedded AI. This layer is less glamorous than models, but it is closer to customers, closer to recurring revenue, closer to cash flow. This is where the second wave of durable companies may form. And now the pattern becomes clear. You see, horizontal AI is powerful, but vertical AI is sticky. AI for healthcare, AI for legal, AI for logistics, AI for finance, let's say. Why? Because domain expertise creates what we call defensibility. You cannot just drop a generic model into surgery or compliance or something legally related. You need integration, you need regulatory awareness, you need contextual intelligence. This is where capital begins fragmenting. Instead of flowing into a few mega players, it spreads into industry specific champions. This is also where the talent bottleneck intensifies because now you need people who understand both AI systems and industry complexity. That combination is quite rare. Rare equal scarce. Scarce equal investable. So let's zoom out a little bit. Where is pressure building compute supply versus demand, energy grid limitations, AI skill labor shortage, enterprise, you know, cultural resistance, regulatory uncertainty. They are not weaknesses, they are pressure zones. And pressure zones attract capital because solving bottlenecks create leverage. This is how you this is how you think like a capital mapper. You don't chase headlines, you observe pressure. Capital moves in waves. It does not stay static. First infrastructure, then scaling, then platform power, then applications, then vertical specializations, then human capital amplification. We're likely transitioning from infrastructure dominance toward integration and specialization dominance. This is the shift, and shifts creates repositioning. The question is not which AI company wins. The question is which layer is entering its acceleration phase. That's a more strategic lens. Now, now let's bring it home a little bit. If capital is flowing toward integration, vertical AI, domain specialization, energy support, AI skilled talent, then positioning near those flows increase your probability surface. This does not mean speculation. It means awareness. If you're build near pressure zones. If you're learning, learn near bottlenecks. If you're investing in your own skills, invest where scarcity is forming. Because money follows pressure, and pressure reveals future structure. Now, most people try to predict the AI future. I prefer to map the AI present because the present already contains the signals. Where capital concentrates, power forms. Where bottlenecks forms, opportunity emerges. And where pressure builds, the next layer of growth begins. We're not watching a hype cycle. We're watching a capital rotation cycle. And if you learn to read it, you don't chase noise. You position with structure. This is how we explore the AI economy, not emotionally, but structurally. And we'll keep mapping it in the future videos. So thanks for watching it. I hope it gives you something a little bit more constructive, structured, and a little bit more interesting. Uh, if you liked it, please put a like on it, subscribe. If you have any questions, comments, please leave them in the comment section. And I will leave you on this one, and I will see you in the next one.